Hello everyone, hello traders, welcome to our new webinar. It's Monday, first one of December, last month of the year. So how is everyone doing? Shaban is here, Khalifa, our member is here. Hello guys, hope you're doing well. So NS as always is here as well. So you can see my screen, you can hear me well, perfect. So this time we will start with cryptocurrencies. As you know, dollar and the FX markets in general was a bit quiet at the end of last week, unless you're looking Japanese yen. So we will cover all of that a bit later. But firstly, we will start today with our cryptocurrencies. Now, before we go to the cryptocurrencies, let me just remind you that today is the final day for this offer. So firstly, we had Black Friday, now we have Cyber Monday. So if you are new to our services and you want to make some research, maybe look for a monthly discount and then you will have a full access for this membership. Or if you want to have a longer period subscription, then of course watch for the yearly discount, because these offers will be removed in the next 24 hours. Now, as we said, we will start with cryptocurrencies. So we are seeing that there is an alt season. Obviously, Bitcoin is very slow around 100,000 level. It's a very big pivotal level. There was a lot of portfolio adjustments, especially ahead of the end of the year. So this has some impact on these markets, because I think that there are a lot of transactions from Bitcoin to other altcoins, especially when Bitcoin just hit this magic level. Now, I still think that Bitcoin will move beyond this level, but it doesn't mean that it will outperform altcoins. I still think that altcoins can do very well, and we have here Bitcoin dominance versus compared to others dominance, and we can see that Bitcoin dominance is losing, it's decreasing. It means that there are a lot of inflows into altcoins, and this reversal is quite significant and suggests that or actually just confirms that we are really here in alt season. Now also sometimes like Ethereum versus Bitcoin ratio was very useful. Where did this? Here it is. When we want to identify this alt season, and what we are seeing so far is that Ethereum versus Bitcoin ratio chart. Okay, as you know, this one has hit some significant downside levels, and we have been posting this chart to our members as well, and we said that most likely this one is coming into some very big support. And if you look closely here, from that consolidation that has been the case in this first half of this year, we then see a pretty nice decline, but looks like that was even a wedge formation. And what is the most important right now is that we are seeing some very nice reversal from these lows. So I think that Ethereum may try to outperform Bitcoin going forward. Even if Bitcoin breaks above 100,000, we see a lot of more upside potential on the Ethereum. There is even a very big triangle still very possible, and if we'll see some interesting pullbacks on the Ethereum, I think that there can be very attractive and interesting setups there. But before we go to Ethereum or Bitcoin charts, let me just also look at the Bitcoin ETFs. Here we have this one. It's Grayscale Bitcoin Trust, and obviously we are here progressing hard into a fifth wave, but not really completing this structure yet. So now when Bitcoin is testing this big level around 100,000, maybe what I think may happen, we will see after this consolidation, we will see a push higher, maybe even we'll pass that magic level for 5% or so, and then we will see a retracement. So still think that this higher degree wave 4 is something that we should pay attention on and be aware, and maybe that's something that you want to look for before maybe entering some short-term, or look for some short-term setups on the long side, obviously. Now what is also the most important of all is crypto total market cap. This one clearly in strong recovery, and that's also a way forward that we should be aware in. Maybe already we'll start seeing evidences that wave 4 is pulling back this month, okay, or maybe at the start of next year. So just be aware that there will be some setbacks, and maybe even altcoins, some of them will see some major retracements. But overall, where we are regarding the big cycles, okay, we still think that 2025 you will have to be very careful. A lot of trends could come to an end, because right now there are a lot of hype going on. We still do not see FOMO, but I just think that if we'll see some explosive sharp moves to the upside on Bitcoin, I think that this will pull in even more investors, and most likely will send us into very late stages of this cycle of optimism. And how I see that we are maybe in a cycle of optimism, here we are looking at Google Trends, okay, and search term Bitcoin USD, you can see that we are at the highest level for the last 5 years. So it means that there are obviously a lot of investors, new potential traders who want to participate in this bull run. And if we'll break this 100,000 level, there will be even more traders that will try to join this trend, because again, some massive crazy targets will be called. Someone is already looking now for 200,000, some is already looking for 1 million. But I just think that even if we see a Bitcoin moving to 130,000, okay, I just think that this will be a massive move of 30%, and during this time there could be a much more upside potential on altcoins, because 30% from here on Bitcoin at this value would be quite a lot in my opinion. So I think that if we suddenly will see this happening at any given point in the next few months, I just think that this will be serious situation of the last push higher of this optimism. And I think that you definitely don't want to be looking for some major investments at these levels with Bitcoin, because you clearly want to buy when the price is low, not at the extremes, especially when you look at these Google Trends regarding the sentiment. Now also, what is important maybe to keep an eye on are exchange outflows. We talked about this in the past. We were seeing some outflows recently, okay, but was not that, especially on spot exchanges, not on leverage exchanges or futures or options. But if we look here, we have seen some spike, but definitely not, we didn't surpass the previous ones. So, but if we will see some extremes in the next, let's say in the next few weeks, few months, let's say that Bitcoin will move very sharply in a very short period of time towards 100,000, 110,000, maybe even higher prices, then I'm sure that there will be even more exchange outflows. And this will be then the signal that we are at some very extreme levels here, okay? Now, why I think that in the short term we are still going to see a break above 100,000 level is because I see that stops for potential for the shorts are increasing around these levels. So some is just want to take smaller risk and look for potential bigger reward on the downside, which certainly a risk reward obviously is there. But I think that if a lot of stops are going to be seen here at these levels, then sooner or later we will most likely clear them out before market really turns to the downside. That's why I said that earlier, that I would not be surprised if we see maybe 3, 4, 5% push above that level, above that magic price, to pull in a lot of other traders before market maybe finally see a reversal into a higher degree correction. Now, if we look at the Bitcoin itself here, we are definitely in this fifth wave. We have room for more further upside. As I said, be aware of this wave 4 setback. Now, regarding some cycles here on a weekly scale, I would pay attention to end of December and end of January. That's actually the period when Trump will also took office. So up there, based on time projections, if we look and compare the first leg, each impulse lasted from 20 weeks to 26 weeks. So I think that that's quite important time period for this current bull run, especially if we also consider that corrections were also very similar in time. This one was 22 weeks, this wave 4 was 21 weeks. And in Elliott wave terms, obviously we are seeing prices in a fifth wave. So that's why I'm saying that be very careful up there. Now, I also said that I will look at the Ethereum. So why I said that there can be a lot of more upside potential is because we are seeing some kind of a triangle here. I'm just wondering if we can hold this trend line and maybe see some wave E setback. Maybe this wave E setback will be smaller, could unfold maybe at the same time when Bitcoin will also make that wave 4 correction. But I think that whenever we see this retracement, there can be opportunities here still on the long side, because obviously this whole pattern suggests that it's incomplete. But of course, sometimes you will have to be very patient and wait a long time before market will really finally break to the upside. Okay, we were seeing this example, for example, on Ripple. As you know, the market has been mostly sideways, but now it's finally moving to the upside. It's not a surprise. There were a lot of FOMO going on here last year in July of 2023, when everyone thought that Ripple is headed straight to the upside. But back then, when there were news that they won the case against Security and Exchange Commissions, what happened? Market reversed completely to the downside, kicked them out before market really finally recovered. And that's the chart that I also posted and shared on Twitter back then. So that was the news that they won a Security and Exchange case here. But what market does, well, there were a lot of inflows. Everyone started calling $1 to $2 targets. Market reverses, does the unexpected, clear them out exactly at this level. If you look closely here, exactly at this level when news comes out, and then when liquidations are done, market finally turns back to the upside, because usually you will see the strong moves where there are no CRUDE involved. Okay, in majority of people will be taken out of the market, because market will never reward us just so easily that everyone will become rich. Trust me on that there will be liquidations on the way up always. So that was the case on Ripple, and that's why I said that maybe on the Ethereum you will have to be also very patient. But here, what we are looking at on Ripple regarding targets, definitely I think that we are headed above these 2017 December highs. Up there, be very careful. Obviously, at some point, we will again see a new correction. There won't be just a one straight move to the upside. Maybe we'll see some setbacks in the near future. Then $2 could be support. Below that, you have $1.4, okay, which are the swings here from 2021. Now, as I said, we will also take a look on FX. Here we are looking, I'm seeing the chat, something is happening there, but sorry guys, I'm very limited with time. I cannot look at markets you want. That's why we have chat room for our members, where some of them can ask questions and we look at the markets and we share our ideas there, because I have limited 40-45 minutes for this webinar, and I have my list what to cover, and definitely cannot spend time on some of the requests. Sorry. So here we are looking at the dollar. Again, just a reminder. Now, dollar has seen very nice move to the upside 2016. Then 2017 January, we have seen a top formation when Trump took office. Now we have a very similar price action. I said that most likely we are headed up to 108. I still think that there can be maybe one more push to the upside. Why? Because wave C, right, is a motive wave. Should be structured by 5 waves. We successfully called this pullback last week. Notice that we are now at this trend line support, and not only this trend line. Notice that we also have now trend line support connected from this wave A. So all comes in right at this area here around 105.60. We said that this level to our members last week is quite important. If we can stabilize down here, then another push to the upside is still coming, and that's very important, because then we would have all needed 5 subwaves in place before market may turn to the downside. So I think that maybe we are still going to see one more push higher. Keep in mind that we have Powell speech, I think, on Wednesday. We have PMI figures as well from the US, but more importantly will be jobs data on Friday. So till then, market could either stay sideways or maybe even push to the upside for this fifth wave. But whenever we approach this 108 level, I just think that be aware of a reversal. I don't believe that that later this year, let's say in the last 2 weeks of December or last week December, we'll see straight continuation to the upside on dollar or in general. I think that the major reversals will occur next year. I'm not really sure and convinced yet what this means and will cause on other markets, maybe some blow-off moves across different assets, including stocks, cryptos, whatever. But I just think that for now, dollar pattern is very, very important and in my opinion, very clear. Okay, so we'll see what will happen in the next few weeks, but I certainly would not be surprised if a major reversal for the dollar will show up. It's not only about the US dollar. We said last time, also watch the euro. As you know, situation, the euro is not looking good, especially from an economic perspective. That's why they are cutting rates. Inflation is still a big issue and could be even bigger issue if euro dollar will keep dropping. So I still think that euro will stabilize. Now, regarding positioning, large speculators are heavily short, but they were also at the same positioning here in 2022, as you know, and then market stabilized and reversed higher. So I think that that's a very probable also to happen next year here on the euro. So I think that there is a chance to see some stabilization. But again, before this potential bottom here or higher swing low here could unfold on the euro, we still need all 5 subwaves within this wave C. So we are tracking this wave C and actually we are in final stages here. So wave C should be structured by 5 waves. Now, if you're looking for some potential trade ideas here, then that's still basically a downtrend, okay? No doubt. I'm not saying that we are already in bull run here on the euro. I'm just saying that sooner or later we will come into a support, and for now all of the wave structures suggest that one more leg here is missing. So 106 was very important for resistance. We've been talking about this one last week when market was quite slow, stabilized a bit during Thanksgiving holidays, but now we are turning away from it. We also have still some gaps here from November 22nd that hasn't been fully filled, especially not on some other major currencies. If we'll take a look, then this suggests that there can be a bit of more dollar strength maybe in the near term. So watch out for weak currencies like Australian dollar is also looking weak. I will look into that in a second. So as long as we are below 107.64, I just think that there is a chance for another, but I think that final dip here. Okay, why 1.0764 is important? Because if that's an ongoing bearish impulse, then wave 4 should not trade into the territory of wave 1. If that happens, then bearish impulsive wave count is completely invalidated, right? So I'm waiting for this fifth wave, then possibly we will get a low, and I think the very major unexpected reversal, because now when market will stabilize a bit, everyone will still won't be convinced where the euro dollar will go. Will this very strong sellout that occurred here through November will continue? And if that happens, then a lot of traders will be caught on the short side because they will be convinced that the euro is headed even towards parity. Okay, but in Elliott wave terms, this fifth wave would actually tell us that we are moving into some extreme pessimism and that we know what follows next. But suddenly, let's say that I'm wrong, that this is not a wave 4, and we maybe even get some head and shoulders bottom formation here. If we start rising here above 106.10, then if we get an overlap with 107.60, fine, we will have enough of confirmation that bottom has already been established here, and then we will be able to play on the long side after pullbacks. Now, as I said, watch Aussie because it's weak. It's also acting very weak today. Just look at Aussie and what's happening there. What's the most important is that inflation in Australia last week came out lower than expected. It means that after RBI has been on hold, now they could be looking to cut rates, and if they will moving in this direction, of course that's what can keep Aussie in this downward pressure here. And I still think that one leg here to the downside is missing. I have to update this chart as well for members. I didn't done it yet today, but definitely I'm looking for more weakness here. And why I think that this one is very important, not because I would like to short this pair, okay, but because on the opposite side of that, we had Bank of New Zealand last week that cut rates, but it was some kind of a hawkish cut, meaning that they could be done with cutting rates. So if we have, in the other hand, Kiwi that could potentially be even headed higher, or that at least could stabilize, we have a quite nice impressive bounce here. We have Kiwi where maybe rates will not be cut in the next month or two, and then we have Australian dollar where rates could be could get lower, and this makes a perfect case for Aussie New Zealand dollar to the downside. Now in Elliott wave terms, I just think that we have a very beautiful pattern, very beautiful reaction, strong drop from that highs. We talked about this last Monday in a webinar, and as you know, what's the most important to say the top is in place? It's whenever you have 5 waves in one direction. In our case, obviously, if I said top, then to the downside. So here we have wave 1, wave 2, wave 3, wave 4, and I think that wave 5 here is missing. So after a pullback, I think that more weakness will be seen. Also, we have a pretty nice broken trend line here that could act as a could be as a resistance here around to 1.1070 if we get to this level. Also, maybe if we go sideways here for the next few days, this could even be right shoulder if that was a left shoulder and that was a top here. So I really like how this unfolds. I mean, we have just textbook from stuff here from an Elliott wave perspective, but I also like it because not only Elliott wave supports this view, we also have this this policy that could be made, the policy decisions from central banks that could drive this pair to the downside. Now here we have dollar yen. As I said, dollar yen last week, not last week, but in November, finally it found some top here. The serious reversal is happening from between 61 and 78.6%. So it was quite strong recovery. Still can be even first leg of this higher degree wave B that will take us even higher. But I just think that at least in the near future, we will experience more weakness. Why? Because we have Japan that is already eyeing towards potential, again, new hike, and I think that this could keep Japanese yen very strong going forward. But maybe dollar yen is not the right pick for trades. Okay, I just think that yen crosses are much more could be much more interesting, and this one is here. No, just a second. Here. I don't need this one. Okay, here it is. I think that yen crosses are much more interesting because we have, as I said, Aussie dollar is looking very weak. You have dollar yen that is turning to the downside. So Japanese yen is the strongest, Aussie is the weakest, right? That's why I'm saying the dollar yen maybe is not the best pick, because after all, we have dollar index that we showed you earlier that is still holding this support around 105.60 and now even the recovery. So I think that those yen crosses are much better choice. And so far we have very beautiful reaction to the downside. Here is euro yen that we called, and we said that most likely we are headed lower when prices were trading around 164, 165, and you can still see that there is room for more weakness. Now I know that if you're more like a short-term trader, then you probably won't risk any kind of a trades down here, but if you will watch maybe and observe the next bounce on a smaller time frame, I think that fourth waves is something that could be interesting to join this downtrend. Then obviously you will have to keep an eye on invalidation level to make risk reward trade much more appropriate, okay? Because here on a smaller time frames based on sub waves, you can identify closer invalidation levels, okay? But overall, I just think that sooner or later we will start breaking down towards August lows. Even if you look at CAD yen CAD in general stronger than euro, but even this one is showing some very nice impulsive downward reaction. If you look here on 2-hour time frame, we have very beautiful 5 waves down, maybe even some wedge formation, and could be still end of a wave 3. But whenever we get 3 wave rise, maybe even back towards this 107.70 would be the first resistance here, and then you have 108.60. so this resistance area, whenever we get 3 waves rally, I think that's the next zone from where we could see a new continuation lower. Now, regarding stock market, as you know, this one is still moving to the upside. We are seeing some divergence between major indexes. I see Nasdaq 100 much weaker, so maybe there is going on some rotation. But still, looking at the S&P 500, we are at the levels where it's very hard to find any kind of a bullish setups here. Of course, we could even be headed to the second resistance around 6,200, but I just still think that the most important is just to be aware of this wave 4, which in my opinion will occur, could occur next year. Now, DAX, I don't have it here, but I can look. Now DAX is breaking also very nicely to the upside, and it looks like it's much more appropriate maybe to trade, especially given the magnitude of this current break higher. But I think that you don't want to chase this one at these levels either. You want to see some setbacks in 3 waves. We were looking for a push to the upside, but I see right now that this one is quite aggressive and a strong one. So if you want to join this trend, you certainly would want to wait some 3 wave retracement first, okay? Either in ABC fashion, or maybe some kind of even triangle could also unfold. But you have to keep an eye and wait on a corrective price action before you want to join some trends. Now let's take a look on dollar Mexican peso. As you know, this one, Mexican peso in general, has been quite weak recently because of Trump. And what's interesting is that we have some potential ongoing wedge formation here, ending diagonal, maybe even has stopped out here if we start breaking aggressively lower trend line here. So I still think that this move to the upside was based on speculations and based on these talks regarding tariffs, but I still think that this sentiment can change around. It was a very similar, I think in 2016, 2017, when Trump took office, we have also seen nice push to the upside and then very strong reversal to the downside. So I would not be surprised if something similar would happen again here. I mean, it's not about sentiment, it's also about just the technical picture of the pair. Wedge formations, as you know, are very slow, normally will occur at the end of the trends, and once they are done, a very sharp reversal will occur to completely erase the previous gains that were seen within this wedge formation. So I think that there is even chance at some point to come back dollar Mexican peso towards 19.60. But for now, I don't see a confirmation the top is already in place, okay? But if we start breaking this 20 level, then maybe we will have more clue that that dollar Mexican peso is really done. I forgot to invite you to like our webinar. Press a like, leave us a comment, make sure to subscribe to our channel as well, so that you will be notified next time when we share some new videos or webinar. Now let's take a look on gold. As I said last time, I think that metals are in consolidation. I think that we are in a wave 4. We had some very beautiful intraday setups, reactions, and what we shared on Twitter and social media, and also obviously with our members, it went quite well. So I think that we have very interesting structures here, but still, maybe if we would find some interesting patterns, this will allow you maybe to grab some short-term trades, because on the bigger scale, I still think that we are in the middle of this consolidation and that this wave 4 is not finished. But of course, wave 4 will not always be just as simple like an ABC. Sometimes it will be complex correction, like a flat running triangle combination, whatever. So you really will have to be very careful in this this zone. But I think that maybe in the near term, watch for more weakness. I just think that there is an open gap around 2560 from November 17, if I'm not wrong, which could be a very important level to watch on the downside if we see weakness. But why I see this gold still in consolidation and not seeing any kind of a progression higher is also on silver, where we can see that prices are much weaker. There is not an uptrend. But if you see and want to be convinced that that's a new uptrend going on, then you also, and that maybe gold is going to back towards 2800, you would want to see also silver showing the same similar bullish pattern, but it's not the case. Okay, we have here consolidation, which maybe could still retest the upper side of this range before market will eventually turn lower. I think that 31.60 to $32, it's a very important, very strong resistance. So then don't just get fall blindly behind different articles who are saying that silver is going straight from here towards $50, that gold is going up to $3,000. Make your homework, check your levels, identify the patterns. More importantly, focus on the support levels where you want to enter, not just blindly jump into the market. Also, gold-silver ratio obviously is very important, and this one is trading to the upside, and it's another indication where it does not show that we are in this bull run. We are most likely now in a sideways consolidation. Now, let's take a look real quick on some of the single stocks. I don't have a fully completed list here. I just scanned some of them through a little bit earlier. Let me just check. I think I was looking at Tesla. Now, Tesla, I believe, will break to a new high this week, maybe already today, because we have some sideways price action here, and Tesla is doing pretty well because of connection with Trump, and regulations could be much easier for Tesla, especially for self-driving cars. So I think that Tesla will stay in uptrend. We also have here, let me check this one more time frame. We also have here most likely a complex correction, maybe wait for triangle. We see some setback from current levels, because here you can see that there was a free wave movement to a new high, right? And this free wave movement represents part of a correction, possibly can be a triangle. So if we see some pullbacks here, I think that 330, this could be very beautiful support. But overall trend is bullish as long as we are trading above 2640. Looking at nvidia, we talked about this one also last time. We said that the most important level to watch is around 131. Again, it has been retested 3 times in a row. That was the previous swing high as well. So as long as we are above that level, that's still chance for continuation higher. But I'm afraid that this whole price action, okay, you can see that somehow is losing strength. These lags to the upside are not that significant compared to the previous ones. So I still think that maybe we are trying to move out of a triangle here and complete this this potential final trust out of the pattern before market will make maybe a major reversal next year. Now here we are looking at Meta. Meta is still looking very good actually. We have a triangle here that was completed in August. Since then we obviously should see 5 waves up, and maybe we are now on the way to 5th wave, final leg of this impulse. So I think that new highs here are coming. Microsoft, well, this one is not looking that good in my opinion. Still consolidating we said that maybe triangle is something that fits the best with the current wave structure, so watch out for potential dips. Also, let me just remind me. PayPal is looking good. PayPal has a very nice, beautiful reaction higher. As you know, few months back, actually, we've been tracking this ending diagonal. Not only ending diagonal, head and shoulder bottom formation also put these gains in play, and I think that after any near-term setback, there is a chance for much more upside. I think that 100 level could be seen. Now, I think I was looking at Nike here, and I really like Nike in general. Just let me show you something. Okay, so Nike here, I'm looking at the price action on a monthly scale. Okay, but that's a logarithmic scale by the way, because it's much easier to identify these pullbacks and it's much clearer wave structure. But whenever you have the pullbacks, it's not only the price that matters, but also the matters is the length of the pullback. So longer will be the pullback and the consolidation, less traders will be interested to get involved in the market because they don't have a patience. But if you can recognize some kind of a pattern that is very deep in price and also long enough in time, especially if we compare the consolidation with the previous ones, well, that's when it could be quite interesting and attractive. Now here's Nike, and by the way, that's still as you know, very known company. Earnings were quite good, and for the last few years. So I think that there is a very good chance that at some point Nike will stabilize. And if you look here and maybe analyze the pullback from the highs, you can clearly see that that's potentially a free wave in the making, possibly even with an ending diagonal now in wave C. So I think if we see another maybe drop towards $60, this could be quite interesting and attractive potential support. It also dates back to March of 2020. So down here, I think will be quite interesting, and I will definitely keep a very, very close eye on this level, because as I said, on a longer scale, we have a very beautiful retracement in price and in time. And here on a smaller time frame, we have probably the most powerful ongoing Elliott wave pattern that usually puts in a major reversal. So I think that in 2025 we could see some very interesting recovery. Of course, as I said, for now this downtrend is not finished yet, but around 60 could be very, very interesting and attractive support. Okay, traders, that's it for today. I hope that you enjoyed this presentation. As I said, make sure to check our offers, especially for crypto and currencies. And with currencies, we are also covering other markets as well, not only FX. We also regularly update this one. So make sure to check our services. If not, I will be happy to see you again on Monday in our regular webinar. Traders, enjoy your day. Talk to you soon. Bye.